Tom, welcome. It seems like part of the message here is that the inflation effect on your revenue and the headwinds there, and then just everything that's happening to slow the economy is perhaps also slowing some of the data flows that feed into your business?
Yeah, that's right. Foreign exchange isn't helping either. About half our revenue is from overseas. And we're really seeing the impact in our media verticals, e-gaming, less traffic there, video, OTT, even advertising have been impacted. So traffic is up year over year, but not nearly as much as it normally would be. And so that's got a near-term dampening of our revenue growth. We were pleased with Q2 results. We grew revenue 9%, really excited about security and compute. That's now the majority of our business. People think of us as the CDN company with traffic, but the majority is security and compute, and that grew 30% year over year in constant currency, so really exciting.
So how is that affecting your approach to CapEx? You talked in the call about really some cost controls that you're working on, including spending less CapEx-wise. What specifically are you spending less on, and how are you prioritizing things that are going to result in higher margins?
Yeah, we've been shifting focus on investment towards security, especially in zero trust, where we have the market-leading solution to stop ransomware, and towards compute, which is an enormous potential market for us. And so we're saving a lot on CapEx because we're deploying less servers for delivery, especially the peak events, where you'd spend a lot to build out the capacity, and the revenue is not that much there. So you see that in our results, a little bit less revenue, but very strong cash flows because of the savings on CapEx.
What does that do for your relationship with data center providers? Do you need less from them for the foreseeable future going forward? You talked about some of these economic impacts lasting several quarters.
Yeah, so we're still growing and we're still investing in the platform, of course, but not at the rate that we were before. And so the CapEx is much lower than we'd anticipated. You know, historically, network CapEx would be 8 to 10% of revenue, and we were 3% last quarter, and we think it'll be low to mid-single digits for the foreseeable future. So we're, adapting to what's going on out there and really excited about the future in security and compute, where there's just tremendous growth potential.
Yeah, all right. Jim Chanos, take note with his data center thesis. I want to finally ask about the workforce. Are you slowing hiring, freezing hiring? Are you cutting? Are you still hiring? Are you maybe hiring gangbusters in the security area that you're excited about?
We are continuing to hire. We're not freezing or doing a RIF. We've been very disciplined in the hiring over the last couple of years. Some companies went through a boom and now a bit of a bust there, but we've been steady and obviously focused in security and in compute. With the Linode acquisition, really puts us in a great position to tap into an enormous compute market. And we were really excited to sign up our first major enterprise customer with a critical app that one app is worth millions of dollars a year as it scales. And that's just the tip of the iceberg.
All right. Tom Leighton, CEO of Akamai. Thank you.